Hi there, Mike Brady with Generosity Wealth Management, a comprehensive full-service financial firm here in Boulder, Colorado. I'm recording this on Sunday morning, June 26th, right after Friday's pretty interesting day worldwide in the market after the vote, the Brexit, there on Thursday. Now, I'm frustrated for a number of different reasons, okay? It's good to just admit that. I'm frustrated because in one day, we gave up the gain that we had in the last 3 months. Okay, the first quarter, and I'm talking about the Dow Jones here because that's what everyone seems to talk about. It's not that it's the best unmanaged stock market index out there, but it's the one I'm going to talk about here today because once again, that's what you're hearing on the news. The first quarter of this year was just horrible. Came back in the March of this year and really kind of continued, and we went finally a little bit positive for the second quarter, and then we gave it up. Very frustrating. Okay, you're getting this a few days after I'm recording this, so maybe the market's gone down a little bit more. Okay, maybe it's rebounded back. I'm not sure yet because the future is always uncertain. Okay, and that's another one of my frustrations is that humility is a big part of my value structure, and so the future is not known, and so the same people who got whether the vote was going to go stay or leave, they got it wrong, are the same people who are now telling us exactly what's going to happen over the next 1, 2, and 5 years, the impact of it. Sorry, I just don't buy it. I think it's too early to find out what the long-term impact of this particular decision and how it's going to play out. So anyone who says that they do know with certainty is fooling you. Okay, so I'm frustrated because so far this year, in general, the unmanaged stock market indexes are about break even, and everybody loves to make money. I like it as well. Negative is negative 10, negative 20% in my terminology. Break even is plus or minus a few percent. That's frustrating. Okay. If we look back, I'm going to throw up on the chart. By the way, first is the year to date. You can see that we're now back to where we were about a month ago in May, and then where we were back in March of this past year. Okay, that's the year to date. Now I'm throwing out the 1-year chart of the unmanaged stock market index, Dow Jones Industrial. Now you can see the 1 year. Okay, you can see that it too is about break even. Very frustrating. All this work, all this high expectation that investors might have, and you're right back to where you started. Okay, but then we look out 3 years. Okay, look at that 3-year graph. Okay, that's why we have to have long-term time horizons. Now let's look out 5 years. Okay, that's your 5-year. Let's look out 10 years. There's 10 years. Okay, there's ups and downs, etc. Okay, that's one of the reasons why we can't make we can't make long-term decisions based on short-term trends. Even this year of 2016, we still have half of the year to go. I will tell you that for an article that I was interviewed on, I looked all the way back to 1976. And there were 8, why 1976? Just because that's where I had the data for the S&P 500, another unmanaged stock market index. And during that time frame, we've had 10 election cycles. And in those 10 election cycles, 8 of the election years were positive, 2 of them were negative. Okay? That does not mean that the past means that this year is going to be positive. No, absolutely not. Historically, though, it has been positive. As a matter of fact, history, that's one of the things about investing is what's your conviction? Do you believe that things are going to be positive over the long term? Here in your investments? If the answer is no, then why do you have them? That's the big point. So when we get back to this, it gets frustrating because we all want to make money. Okay, let's not kid each other. But you know what? Sometimes patience is the big virtue that we have to have. We have to have the long-term time horizon, etc. So I'm going to just tell you a few of my convictions here. Number 1 is diversification. In a generally declining market, it does not guarantee against losses. However, I do believe in diversification because that is a part of one of my second big beliefs, which is humility. Okay, anyone who says that they know what the future is or says exactly what one sector or another is going to do is bunk. Okay, I deal in probabilities. I deal in what I believe, but then admitting very humbly that I could be wrong. So therefore, if I'm wrong, how can I have a good portfolio? I'm going to throw up on the chart on the screen there one of the charts in that, and I've just circled it there, but a 50-50 stock and bond portfolio going back 26 years, all the way back to 1980, has never lost money over a 5-year time horizon. Okay, the next 5 years absolutely could be different. Okay, and I say that with great humility about that. However, I believe that having diversification does make a lot of sense. Number 3, conviction. What is your conviction? I mean, I personally am very bullish on the United States. I have not been that way in Europe for a long time. Go back and look at my videos and look at what I've been saying for the last 2, 3, 4 years. And because of that, the specific exposure to Europe in general that I have recommended in general, once again, sorry, because I got regulators, and so this is not an individual recommendation for any individual person, is, hey, Europe's got some problems. Okay, they've had some problems. I didn't think that they were going to have those problems separately, which is what it's looking like. I kind of thought they were going to have all those problems as a whole, as a union. I think it was Ben Franklin who said, surely we must hang together, or assuredly we will hang separately. Okay, well, it sounds like Europe has decided that they're going to hang separately, but hang they probably will. And I've been talking about this for the last 3, 4 years or so about the economics, the underlying fundamentals, the issues that Europe has. Go to my website if you want. Look under Europe where I've got them all tagged. And you'll see all these articles, all these videos about what I've been talking about in Europe. So we've got diversification, we've got humility, we've had what's your conviction. Number 4 is stick to that conviction. Okay, we can't make long-term decisions based on short-term trends, and so you've got to understand that. Number 4, keep your emotions in check. Emotions are not bad. You can be frustrated. You can be really irritated. But you know what? How does that play into the decisions that you're going to make and into your action? Are we going to be disciplined? Okay, discipline is a big issue, and so we've got to, as mature investors, to be disciplined in what our conviction is. Okay, and these are some of the biggest ones that I have. And the last one is have a long-term time horizon. Okay, if you've got a short-term time horizon, why are you in the markets anyway? Okay, you've everything, no matter whether it's stocks or bonds or international, domestic, they all go through cycles, and these cycles are sometimes short-term. Within months, within just a few years, etc. And so, if that's what your time horizon is, then you can be on the down cycle. I mean, there's nothing that always goes up. Okay, and so therefore, a good blend of them. I don't know if you can see my hands here, stocks and bonds and cash and stuff. You mesh them all together, and sometimes they do different things at different times. So therefore, you have a portfolio that is brought together, but also for a long-term time horizon. The end of the quarter is coming up. I'm not sure exactly how the end of the quarter is going to end up, but I like the way I've worked with clients and have a portfolio that works for each individual client. At the end of every quarter, I, of course, look even closer and say, is this right for their risk tolerance level and what their goals are, individual, etc. If you're not one of my clients, you need to think about that for yourself. And if I can help out, of course, give me a call. You'll hear from me next week after the end of the quarter, but I wanted to get this out right away because hopefully I bring a little bit of calmness, hopefully a little bit of humility, but hopefully a little bit of wisdom and my perspective, because of course with 24/7 financial news, you hear about it from everybody else. And so I wanted to get mine out as well. Hope you're having a great summer so far. I am always available. I do spend some time up in my cabin. I think you people, those that are close to me, know that. But that being said, I have internet up there, I have phone, and frankly, I work a full day there as if I was in the office. And if I didn't tell you right now that I was in my cabin, you wouldn't even know where I was emailing and calling you from. But I'm always accessible. My office, 303-747-6455. Generosity Wealth Management, www.generositywealth.com. Hope you have a great day. See you. Bye-bye.